And now to our first business story. Fresh data from the commercial bank suggests that the Bank of Ghana has scaled back its dollar sales to the market this week. George Biafi has more in this report.
Compared to the previous weeks, the amount that the Bank of Ghana has been offering to commercial banks through the spot auction and other avenues have been reducing for this week. One can talk about the total amount, which used to be above $100 million some weeks ago, but has slowed way below this amount for this week. But for some, the development has fueled speculations that the Bank of Ghana may be comfortable with the local currency trading at around the 10 Cedi range to a dollar, which President John Mahama recently disclosed that could be the true value of the Ghana Cedi to a dollar. But persons close to the Bank of Ghana insist supplies to the commercial banks have always been guided by market demands. So can we make an intelligent guess that maybe we have come to the end of the road when it comes to those sharp daily appreciations of the Ghana Cedi to the dollar, which has put the year-to-date gain at more than 40%? And should we be working with the 10 Cedis 25 pesos for all our transactions and business dealings? Well, maybe time will tell.
Moving on, the Collateral registry of the Bank of Ghana has called for specialized courts to speedily attend to issues defaulting borrowers. According to them, the existing civil procedures is time-consuming and often affect the value of collateral securities by the time of judgment. Here is more from the Stakeholders Forum organized to mark the 15th anniversary of the Collateral registry.
Stakeholders Forum, panelists comprising regulators, lenders, borrowers, and legal practitioners called for robust reforms to improve credit risk management in the country. The Bank of Ghana was urged to update the collateral registry to highlight defaulting borrowers and frequently used collaterals, which would help reduce the rate of non-performing loans. Dr. Benjamin Osei-Tutu, Deputy Senior Manager at the Bank of Ghana, appealed to the judiciary to establish specialized courts to expedite cases involving defaulting borrowers.
Once any borrower finds a way to bring them back to the court, the issues are sustained, and unfortunately, they stay in court for so long, using the old civil procedure rules to prosecute the issues brought before them, which in the first place should not have been there. And so again, until such time, and some of the things Mr. Siama and his team are looking forward to do, is to refine the recourse mechanisms in the framework, so that even if, for some strange reasons, an extrajudicial enforcement would have to end up in court, the court would deal with the matters expeditiously. And perhaps, I suppose, we can even set up borrowers and lenders courts applying these specially crafted rules.
Meanwhile, the head of registry, Fred Esiama, emphasized the need for industry collaborations to ensure robust credit management landscape.
I urge all attendees to actively participate in today's discussions with a view to contributing to fashion a more robust secure transactions framework for the country, and also ensure that the Collateral registry continues to play a vital role in promoting a secure and reliable lending environment. Let's harness the momentum from this celebration to drive progress and innovation in the next 5 years.
The panel discussion focused on strategies for improving secure transactions and enforcement regimes.
Still on banks, and Ecobank Ghana PLC has announced dividend payment of 334 pesos per share for all eligible shareholders, reflecting the bank's strong financial performance in the past year. At the bank's 2025 annual general meeting, board chairman Samuel Ashite Ejei attributed the impressive result to the resilient operational strategies. The bank recorded a revenue of 5.4 billion Ghana cedis, with a profit before tax reaching 2.4 billion Ghana cedis, a 139.3% year-on-year increase. There is more in this report.
Bank Ghana PLC ended 2024 posting a revenue of 5.4 billion Ghana cedis while profits before tax hit 2.4 billion Ghana cedis, indicating a 139.3% increase year on year. The bank also grew its total assets by 36.7% to reach 46 billion Ghana cedis, while the bank's overall capital adequacy ratio stood at 17.03% against a regulatory minimum requirement of 10% at the end of 2024. According to the board chairman of the bank, Samuel Ashite Ejei, the stellar performance is as a result of sustainability measures and cost-saving initiatives.
The bank delivered consistent quarterly performance and recorded robust full-year results, maintaining our strong position in the market as market leaders. We entered the year with a clear focus on enhancing profitability, managing risk prudently, and amplifying our positive impact on society. The board is convinced that the present strategy has resulted in clearly demonstrable improvements in qualitative parameters and our financial indicators. Our strong revenue-generating capacity was evident in total revenue of 5.4 billion cedis, driven primarily by increases in net interest income and fee-based income.
Managing Director of the bank, Abena Osei Poku, indicated that with the recovery of the economy, the bank is hoping to deliver strong results and growth in 2025.
Your concern about the dividend, your expectation is that we pay more going forward, and we'll work together, as a bank to ensure, that we are able to pay more next year. What we did end of last year, and you begin to see the results shortly, is that we have actually restructured these subsidiaries that you spoke about. We have looked at, one, the structure. We've also looked at the leadership team, and we've also looked at the strategy and the execution. So we are also very confident that going forward, we'll begin to see these subsidiaries contribute more than what it has been previously.
Ecobank Ghana invested approximately 2.2 million Ghana cedis in 4 educational institutions as part of its corporate social responsibility.
In other development, Ghana's economy grew by some 5.3% for the first quarter of this year. That's according to data released by the Ghana Statistical Service in Accra. The growth rate recorded for the first 3 months of this year was driven by strong pickup in agricultural sector, which is far higher than the little over 4% posted in the same period for 2024. Let's get on to Zoom and speak to the General Secretary of the General Agricultural Workers Union, Mr. Edward Caraway. Welcome to Business Live here on Joy News. Now, I'd like to know, what do you make of the performance of the agri sector for the first 3 months of 2025?
Yeah, good afternoon and good evening to your viewers and listeners.
Good afternoon, you're welcome. All right, so the
Agricultural Workers Union.
Great. Mr. Caraway, can you hear us?
Yeah.
Okay, so
I can hear you.
Yes, I need your assessment of the performance of the agri sector in the first 3 months of 2025.
Well, the statistics have shown that there has been a strong recovery of the agri sector. And that is good news for all of us and for we those who have always been advocating that we have to actually take agri seriously. When we say they should take agri seriously, it's not just to talk about the rhetorics and the policy direction, but we must, have concrete policy implementation that boosts the agri sector. The economy in the past has been growing, but it was growing at the wrong direction, using the wrong sectors to grow. Services sector produces if jobs at all, very unsustainable and then indecent jobs. But the agri sector, apart from its production capacity, will also produce quality jobs. And when I talk about quality, I'm talking about jobs that really meet the needs of the people. Because if we look at the young people who need jobs, majority of them are SHS and JSS and those who have not gone to school at all. So the recovery in the agri sector is putting the economy in the right direction.
Did this number come as a surprise to you, considering the several policies that were instituted by the previous government?
Well, I think that it's not surprising to me because if you look at the policies of the past, if you take the Planning for Food and Jobs program, though it looked good, there were other policies that undermined its production. Apart from that, its implementation was not properly done. So though you had a good policy, implementation was poor. Apart from that, there were other import-related policies that undermined the production capacity of the agri sector. I think you also recall about the discounted benchmark value policy that was granting tax waivers to imports of the same that could be producing or were being produced in this country. So the new direction, which I would encourage government to sustain, is to have a cluster of policies in a manner that do not undermine each other. For instance, our import policies must always be aligned with our desire to increase agricultural production in this country. We should not import anything that would come to undermine the capacity of the agri sector to grow. So if you take the Nkoko and Kitinkiti project, which is to be implemented, what that means is that while we are promoting the production of poultry products in this country, which will go with the production or increased production in maize and other agricultural produce that is needed to feed the poultry, we must also have our import policies in a manner that do not flood our market with cheap and sometimes unwholesome poultry products into the country.
All right, I want to understand from you, in the first quarter, we did not experience these numbers, but from your perspective of someone working in the sector, what are the major reasons and factors for which we've seen a turnaround in the sector?
Well, the turnaround is as a result of, again, also confidence within the economy, and positioning of government and the confidence that people have in it. You could also see that the strengthening of the Cedi and all that have been part of the reasons why the sector is growing the way it is growing. Ideally, within the first quarter of the year, one should expect agriculture not to do well, and that has been the trend. But it's a sign that we are beginning to focus on agriculture. And I think that if the other programs that are to be implemented in this year, and I have been of the view that we will see the full impact of the policies for the year in 2026, not necessarily in 2025, because this is going to be a year of implementation. So and some of the benefits will be delivering in 2026. So if we keep this trend till the end of the year, then of course, in 2026, our economy will be far better and agriculture will gain its rightful position where it will produce enough food for the people and also raw materials for most of our manufacturing enterprises.
Okay.
You know that most of the manufacturing enterprises in Ghana are agri, their raw materials are agri-based. Okay. So it's not only for food consumption, but also for industrial purpose.
I want to stay on the consumption base. We've seen inflation slow down last month, and we've also seen the Cedi appreciation, just as you've been mentioned. But the key issue I want to get your thoughts on is why is it not reflecting on the price of foodstuffs in the market?
Well, it takes time for major sectors like this, when they begin to recover, to bring about the effect that will go with it. You know, it's like when you plant, you know, you increase your production, you cannot immediately benefit from the output, but it will be realized in the future. So the impact on prices would soon come, but around this time, June, July, you will now begin to see prices will come down. And mind you, prices of foodstuffs is not only mainly about fiscal production, it also has to do with other linkages, which people would link it to the Cedi dollar relationship and so on. Now that all those factors are being aligned, then certainly if you go to the marketplace, prices will begin to come down.
Mr. Edward Carraway, we appreciate your time here on Business Live. We'll surely follow up on subsequent conversation on this development. My name is Winston Taki. We take a short break. We'll be back with more business updates. Stay tuned. Welcome back to Business Live. Now to more business update. Ghana has been ranked 8th among Africa's top 10 manufacturing countries, according to a report by the African Exponent, an analytical business information source for entrepreneurs and potential investors in Africa. The next report has more.
The report stated that Ghana's long-term focus on value-added manufacturing in agriculture and cocoa has transformed its industrial landscape. Again, the One District, One Factory initiative has fostered small and medium enterprises SME growth, while established firms like Casapreco and Funmilk extend Ghana's manufacturing reach internationally. According to the report, within the last decade, a few countries have stood out for hosting the largest manufacturing companies in Africa, both in scale and influence. South Africa came first, followed by Egypt and Nigeria in second place and third place respectively, Morocco fourth, Kenya fifth, Algeria 6th, Ethiopia 7th, Tunisia 9th, and Zambia 10th followed suit. The report stated that South Africa is Africa's most industrialized nation. Its advanced infrastructure, diversified industrial base, and global partnerships, especially in the automotive and chemical sectors, make it the continent's undisputed manufacturing giant in 2025. The leading sectors are automotive, steel, chemicals, and food processing.
Moving on, in a renewed push for accountability and strategic alignment in the public sector, Presidential Advisor on the Economy, Cedi Tekpe, has called on state institutions to align their operations with the Ghana's National Strategic Plan and to fall in line with the country's development agenda. He made the remark at a high-level meeting on performance contracts convened by the State Interest and Governance Authority, SIGA.
Presidential Advisor on the Economy, Cedi Tekpe, has underscored the importance of coherence across sectorial institutions, insisting that public entities must fall in line with national policy directives to ensure economic efficiency and impact. Speaking at the performance contract signing event by the State Interest and Governance Authority, SIGA, he emphasized that institutional performance must not operate in silos, but be anchored to broader national goals.
There is an overall national plan, and therefore every public sector institution is supposed to tap into that plan, right? And so once the NDPC leads the charge based on whatever plans are available now and a new one which they are likely to prepare, then that is what should inform the strategic plans, for ministries, departments, and agencies, MMDAs. The expectation simply is that, we will fall in line, because the use of resources by the government itself, efficiently, is based on having strategic plans by the ministries, which show precisely what they want to do. The strategic plans themselves are what guide the medium-term expenditure framework or fiscal framework, out of which is linked, to the performance-based budgeting, which we, the Ministry of Finance lists, which Ghana has adopted.
Director General of SIGA, Professor Michael Pesa-White, added that the meeting was particularly timely, coming at a moment when several specific entities are experiencing leadership transitions.
Many of them have just been blessed with new CEOs, and we expect that these new CEOs may not necessarily be aware that their entities are part of SIGA's oversight institutions, and the culture of non-compliance that may have existed in previous years. So one of the steps that we have taken now is to bring them into the knowledge of the fact that there is SIGA. SIGA expects performance contracts, and out of performance contracts we expect certain level of high performance from our entities. SIGA can name and shame. We can publish the names of the entities that have demonstrate weak culture to signing performance contracts, or have signed performance contracts but are not enforcing them religiously, or are not using them religiously to guide their operations. SIGA can name and shame some of these entities or organizations as well. And I think nobody likes naming and shaming because it has reputational damage for them. And so we think and believe strongly that we will work with all these entities to ensure that we work as a team.
The meeting brought together top-level government officials and policy stakeholders to reaffirm the role of performance contracts in promoting transparency, efficiency, and national development.
That's all for business here on Business Live. My name is Winston Aki. Now, for more news, visit myjoyonline.com/business, and you can find Prempeh International Airport runway extension project to be completed in 2025. This is according to the Transport Minister. Ghana ranked 8th among Africa's top manufacturing countries because of the One which was praised in that particular report. That and more available on our website. Thanks for watching. Have a good business day. Bye-bye.